Welcome back to The Dive. The gold price hike, frustrating inflation from the Fed, Treasury minting a $1 trillion coin, Chinese power cuts, and the scale of its impact on the global economy, world oil outlook, and of course, uranium are some of the topics that our guest will tackle today. He is the principal analyst and editor of Independent Speculator and one of our regulars, Lobo Tiggre. But before we bring Lobo on, just a quick reminder to tap on that subscribe button for me, please. Hey Lobo, welcome back to The Dive.
Happy to be back with you, Cassandra.
Yeah, we're so happy to have you back. Okay, so let's begin with Fed Chair Powell calling inflation frustrating. Assessing the current economic situation, what do you think the Fed is trying to signal to the market?
Yeah, I thought that was pretty funny, actually, in a sad or twisted kind of way. Funny, he's frustrated. What about everybody who bought his transitory story? And as you and I are recording this, Cassandra, he was just on Capitol Hill, sort of sticking to his guns. He's saying he's still saying it's transitory. He's still saying it's not really inflation of the money supply, it's the supply chain shocks. That's what's frustrating. It's not that they're doing anything wrong. It's not that they've misdiagnosed the problem. It's that, the Chinese are having these problems. The ports are backed up. It's COVID Delta, right? It's not my fault. I remember Han Solo. That's not my fault. They said they fixed it. That's what I'm hearing from Chairman Powell. And I'm sorry, I just have to say, I think that's disingenuous. I think it's hard to see that as an honest answer, but what else can he say? Oh, well, we screwed up, or, oh, we don't have any choice. I'm not sure what else he can say. But I think for those of us who are frustrated with the transitory yarn and its impact, its inversive impact on the market, specifically, I mean, this crazy transitory story has people selling gold when there's signs of high inflation, which is the opposite of what should happen. So the good news is that I think that story is really starting to unravel. As Powell spoke this morning, he went beyond frustration to say that he thinks transitory now is well into next year, might be some relief by mid next year. So we'll see. I don't know that he ever admits that he's wrong, but I think at some point the markets call BS on that, and that will be very good for monetary metals.
Exactly. Okay, so there's been talk about the US Treasury minting a $1 trillion coin and using it to turn around and cancel $1 trillion of debt. And apparently this is getting some traction in Congress. What are your thoughts on the solution?
But it's not a new idea. I think it was that Ronway Corrigan of economic finance, Krugman, who first suggested that, mint a platinum coin for $1 trillion. You know what? It doesn't matter if it's platinum or toilet paper or nothing at all but electronics. If you mint a coin and call it $1 trillion, it doesn't make it worth $1 trillion. If, say, it was an ounce of platinum, it would be worth whatever the price of platinum is. That's what its actual value would be. So it's just money printing in another name. If you're going to do that, why bother with the platinum? Just print the money, send it to the Treasury and say, oh, we've paid our bills. Of course, we know what would happen if they did that. If they just go a la Zimbabwe or whatever and just print the money to pay the bills, everybody knows that would be very inflationary. The cat would be out of the bag. It would be an admission of defeat. So we're going to pretend that 1 ounce of platinum or whatever is worth $1 trillion. It's no different. That little teeny tiny sliver of platinum that goes into that coin is worth so little compared to the $1 trillion. It might as well be a piece of paper or nothing at all. So it's just nonsense. It's I think, again, it's dishonest. It's hard to see anybody who's honest, maybe ignorant. If they were honest and ignorant, they could propose such a thing. And I'm sorry if I'm being harsh, but I just don't see it any other way. It's an ignorant proposal. You can't make something worth $1 trillion just by declaring it so. If so, Zimbabwe never would have had a problem.
Crazy. Okay, so moving on here. Local Chinese authorities have ordered power cuts at many factories last week, reflecting a system trying to react to a number of consequences. How big of an impact do you think this will have on supply chains and overall the global economy?
Okay, well, before we get to the impact on the economy and the supply chains, I got to stop here because I don't see any of the talking heads on financial media calling a spade here. And that particular spate in this case is that this isn't just a consequence of unseasonable weather or something like that. This is a consequence of mismanagement, central command and control economy mismanagement. The great planners in Beijing decided that their politics and their goals were more important than the coal supply from Australia. And they said, screw you, Australia. We're not going to import any more of your coal. And guess what? Then they had an unusually cold winter and burned up a lot of coal. And then they had an unusually dry season, and the hydropower or as you say, there's a number of confluent factors here. But they start with, and they wouldn't be a problem if the geniuses in Beijing hadn't cut off the coal supply before they had adequate replacement. So this is a failure of central planning. It's not just some random, unusual, weather event. That's why you plan ahead for random, unusual weather events. You have some store of energy for a rainy day or a non-rainy day in this case. So let's get that out there. This is a failure of central planning. Knock-on consequences. I'm actually, not as alarmist as some of the headlines you see out there. The problem is that we have, or a part of the problem that's critical, is that you have China rebounding post-lockdown. And you have a bunch of production, you have increases in production. So it's not that they were just going along as usual at their normal pace and suddenly they don't have enough energy. No, the crunch is because there's been a bunch of new demand, that producers are using more energy, and there's not enough because of the mismanagement to also keep the lights on in people's homes and things. So we're talking about growing pains. We're not talking about China going into reverse, China tanking, China's going to stop buying copper and everything else. We're talking about growing pains. So how this all works out, I'm not enough of a China whisperer to tell you, I know, here's the plan, here's how it all ends. But I think it's, it gets lots of headlines, but I think it's potentially misleading again to talk about the end of the world or the end of commodities because of this trouble in China. It is mismanagement. They will work it out. It is a growth issue. And I think that's fundamentally, that says actually good things for commodities demand going forward.
Mm-hmm. Interesting. Okay, so OPEC rolled out their World Oil Outlook 2045, stating that oil would still be the leading energy source for decades. What is your sentiment on this and the oil price, considering the alternative energy sources and technology?
Yeah. Well, the first and foremost thing about that is, of course, they're going to say that. What else are they going to say? It's like asking a silver company CEO where he thinks the price of silver is going to go. Have you ever heard an answer other than up from somebody like that? Or a copper guy? Where's copper going? Oh, it's going up. Where's oil? OPEC, where's oil going? Oh, it's going up, or it's going to be essential for years. So of course they're going to say that. That having been said, I think there's a fair amount of evidence on their side. Even with the most optimistic projections for the adoption of electric cars, EVs, it still takes decades. And you're still going to need gas for your gas-powered or diesel for your diesel-powered cars. Well, that's happening. If the optimists achieve their goals and we get 50% EVs by 2040, that's still 50% gas cars, and they're going to need gas in their engines. So it's not going away. And at the same time, for investors, I think this is, never mind the politics and all that, but for investors, I think this is a key point. At the same time, you have this ESG push really turning the screws on the oil and gas sector. You've got oil companies having activist investors taking over boards and causing them to shift away, cut exploration, and cut plans to grow more. There's an OECD initiative called Stop Now, like stop pumping now, stop producing oil now. The problem with Stop Now is if you haven't got Plan B ready to go, how do you keep the lights on? How do you keep your food from spoiling in your, electricity-less refrigerator? And so on. You can't stop now without a replacement. So where I'm going with this, though, is that, they're still doing everything they can to stop now, whether we have some other alternative source of power or not. And I actually think that this is bullish for oil prices. In the near term, there can be kerfuffles, but to the degree that the politically correct forces of the world succeed in shutting off the flow of oil before alternative sources of energy are online, adequate to make up for that, and more than make up for that with the growth of the world economy and population, I think you can actually see all this ESG stuff send oil prices much higher, boosting the profits of the oil producing countries and companies. So ironically, The green warriors could make a lot of profit for oil and gas investors.
Interesting. Okay, so let's talk about uranium now. Uranium has been one of the hottest commodities this year, but it's really cooled down. Do you think it's too late to buy uranium?
No, I think just the opposite. I thank goodness for everybody who missed the uranium breakout, which really was parabolic. I mean, we $30 to $50, didn't quite double this year, but just an astounding breakout due to a number of factors. And this partly answers your question, but it's important stage to set. Uranium was already in a bull market before this year's breakout. Uranium was in a 5-year upward trend. Key point here, and I've been saying this, and people hated this when uranium was breaking out and it was going up, and all the cheerleaders said, "Oh, it's going straight to $100 a pound. It's going to new all-time highs. Don't you dare say anything other than it can only go up. Shame on you, Lobo." And I kept saying, look, it's a trend. It was already a trend, a 5-year trend of higher highs and higher lows. But there were lows. It was very strongly a sawtooth, two steps forward, one step back pattern. This whole 5 years, this isn't just this year. This is a significant amount of time where we've seen big rallies and big pullbacks. So there's nothing strange or unusual about this pullback. It may be exacerbated by the Sprott, input and the Sprott pushing it up faster. We may have seen both the 2-step forward and the 1 step back for this year may have both been accelerated and compressed into the short-term time because of Sprott's buying. But it doesn't change the fundamentals. The important thing is that, like other tailwinds or hopeful tailwinds that the uranium space has seen and not seen over the last few years, they were tailwinds. The trend itself is there. And even after the recent price increase, uranium prices are still not at the level that most uranium projects need to build a new mine. The lowest cost producers of the world can make money at these levels, but almost nobody else can. And the lowest cost producers of the world cannot alone supply the current demand, let alone the increasing demand from all the new nuclear power plants coming online. So the fundamentals are still there. The 5-year trend is still there. And the fact that we've had an abrupt, giant 2 steps forward, maybe 3 steps forward and 2 steps back right now, that actually just fits the pattern. There's nothing shocking or surprising. It's unsettling, but that's par for the course. And I think that's fantastic news for anybody that missed the breakout. All those people who were, heaping the hate on me for saying anything other than, oh, it's going straight up, and saying, hey, the time to buy is on the 1 step back. Well, guess what? We've got that 1 step back. And so, yes, would I buy it? Absolutely. Stock at top of my shopping list is one that got away from me before right now in the uranium space. And I'm hoping that this step back will actually steepen a little more and give me a chance to buy it at what I consider to be a reasonable valuation.
Interesting. Okay, so one more thing before I let you go here. What are your thoughts on gold today as it rallies?
Right, well, as you and I speak, it's up 35, 36 bucks. And the proximal cause is the employment report, which came out, again, surprise to the experts. I gotta wonder what these experts are. It surprises them when it's too high. It surprises them when it's too low. But anyway, you shoot for an average. I guess I shouldn't beat them up too much. But I don't know what planet these experts are living on in the media to just, be so shocked after all the things that we've seen, the reports that you see, in the real world, never mind Wall Street, on Main Street, things are not looking good. And it's not just the Delta variant. It's the whole economic situation. It reeks of stagflation. You look at the headlines right now, there are half a dozen more fresh headlines about stagflation fears. Stagflation coming? Is it stagflation? Looks like stagflation. What do we do? It's not stagflation. All this stuff, whether they're for it or against it, the fact that they're talking about it tells you that this is what people are experiencing and worrying about in the real economy. So I'm not surprised that unemployment came in higher. And here's the thing. It's not just a blip. All the way down from the recovery, we've seen these, trending downward, and then the blip up a week and it goes down, and blip up a week and goes down. But for the last 3 or 4 blips, they've all been upwards. So I'm not saying that unemployment is about to soar. I'm saying that it looks to me like there's a significant change happening right now in the employment market. The data says something is different here. And maybe that's what's got gold responding. It's interesting too that, it's not just gold by itself, it's the dollar. Gold goes up, dollar goes down, they're not unrelated. And so what the markets are telling us is that they see reason to think that, this will prompt more easy money that's bad for That's bad for the dollar. That's good for gold. And maybe the Fed puts off its tapering in light of this kind of evidence. So it's all part of this transitory through the looking glass economy. But yeah, it's interesting to see that rumors of gold's death were much exaggerated. Oh, and by the way, silver was up more than gold. As you and I are speaking, silver is up more than gold. So it's still acting like the monetary metal.
Okay, great. Well, thank you so much for joining us again today, Lobo, and sharing your expertise with us again.
Thank you.
To our audience at home, thanks so much for tuning in. And don't forget to like, subscribe, and share, please.